Welcome to my video. Today I'm going to explain to you how to use the dashboard. Before we begin, please consider subscribing and enable all notifications by clicking the bell icon. With that out of the way, let's get started. The currency strength meter is a graphical representation of the strength or weakness of currencies in the forex market. You can see the relative strength of all majors. Traders can use currency strength to determine currency movements when making decisions for the best trading opportunities. From here we compare the strong currency and the weak currency. Currently NZD and USD are the best currency that we can trade. But can we determine the NZD and USD are good to trade with? Let me share with you how to use the best 6 steps in order to use the dashboard effectively. Step number 1. Look at the currency strength section here. Ensure the strong currency the value must greater than 50 level. On the other hand, the weak currency value must below than minus 50 level. For now, we have 3 currencies that met our requirement, where New Zealand dollar and Australia dollar are strong, while US dollar is weak. Step number 2. As we know, New Zealand dollar is the strongest currency and US dollar, on the other hand, is weakest currency. So NZD-USD is the pair that we are going to trade with. Now we look at the pair column and ensure the pair that we choose is in blue box color. The blue box indicates the respective pair is one of the most traded pair for now. Step number 3. Now we look at the strength column. As we are going to buy NZD-USD, we need to ensure the strength is in extreme buy. The strength indicates that the respective pair price is in big movement and in high volatility. Step number 4. Next we look at the status column. We need to ensure the status indicates buy. This to ensure all time frames are moving into the same direction. Step number 5. This is the important step that helps us to avoid late entry, or maybe we taking the trade while the price is about to slow down or maybe sideways. The ADR stands for the average daily range. The average daily range shows the average pip range of a forex pair measured over a certain number of periods. I would recommend to trade while the ADR value is still below 80%. When ADR is above average, for instance 145%, it means that the daily volatility is higher than usual, which implies that the currency pair may be extending beyond its norm. As today is NFP day, the high volatility is expected. Step number 6, which is the last step. We need to look at the day column. It represents the intraday direction. We need intraday to move along with the current trend, which located in the trends column. The market has tendencies to follow its major trend. As NZD-USD's intraday direction is moving in the same direction of its trend, it gives us a good indication that we are going to trade along with the trend. That will give us much safer trade rather than entering a trade that moves against its trend, thus can be risky trade. You might want to ask, what is the take profit and stop loss price that you can use? Here is the interesting part. The dashboard provides 3 take profit prices, which are TP1, TP2 and TP3, and stop loss price. The stop loss price is not a compulsory, as you can use your own stop loss level. As you can see, these TPs are in black in color, that's mean these TPs are already been hit. If the price that is yellow in color, that's mean the TP price is yet to be hit. The bid column is the current price. Look, the bid price is already beyond the TP3 price. As all TPs have been hit, so it's not recommended to trade the pair. You have to find the pair that's meet our requirements and has available TP price. If the pair that we going take buy long trade is listing at the top, scalping buy with full length of the bar, that's is considered a bonus, as the pair is moving faster than any other pairs. For instance, NZD-USD is the fastest moving pair for now. Now let's find out how the sell pair looks like. As you can see, Euro is the weakest against the strongest currency, which is New Zealand dollar. Let's take a look at the Euro-New Zealand dollar pair. It has a blue box in its pair column. As we are looking for sell entry, the strength column should indicate an extreme sell. Yes, it is literally an extreme sell, you are right. Now, let's take a look at the status column. Nice, it's sell. Unfortunately, when we look at the ADR, the value also beyond 100%, which 34% extra. We don't want to take a pair that's its ADR value is beyond 100%. It can be risky trade, right? Never mind. Let's check the intraday. Does it follows its trend? Look, the intraday direction is following its current trend. That's very nice. Now we know, eventually, the Euro New Zealand dollar was the best pair to trade, as all these TP1, TP2, and TP3 are already been hit. What an awesome pair it was. Look, Euro New Zealand dollar is listing in the top scalping sell in its bar in full length. We know that currently, Euro New Zealand dollar is the most active and fast moving sell pair. Okay folks, that's all for now. I hope you enjoy learning how to use the dashboard and breathtaking business ever. So what are your thoughts on this? Go ahead and share them in comments below, and if you like this video, please subscribe to the channel and enable all notifications by clicking the bell icon to get new video updates. We really appreciate your support. And thanks for watching.